actually, of all the reporting out there, this is the president speaking on the record saying up to 300% tariffs on chips coming into America. I haven't even said the tariffs yet. This is the point. Policy keeps changing. As a strategist, how do you interpret it?
Well, I mean, I think there's a few things that we have to look at. First, we have to look at the breadth of the tariffs that we've seen and the way the market has reacted as tariffs have become part of the daily conversation. At first, April 2nd, this was something that the market felt was a disaster. But as we've rolled forward, we've seen little effect on corporate earnings. We've seen little effect on economic data. And I think there's this kind of benign neglect of tariffs as a concern for the market, which I think emboldens President Trump to continue to push forward bigger and bigger numbers. When we're looking at triple digits, of course, when we're talking about tariffs, that's a pretty astonishing thing. I really like how your last guest with Jordan really kind of talked about the very long-term emphasis here. Building manufacturing here in the U.S. is a long-term thing. Forcing companies or encouraging companies to buy U.S. is a long-term thing. And I think these tariffs are part of that game.
So if the end game is to bring chip manufacturing back to America, you agree with Jordan that it will work, or you disagree?
Well, I think there has to be a long-term commitment on the part of the administration and the folks in Washington to keep those tariffs in place. I think that's in question, whether that's something that we're going to see over the period of several years, because that's what it would take, several years to bring manufacturing back to the United States, or to the United States in the first place. So I think there's still an open question as to how effective it will be and how long-term that commitment will be.
And how long until you see it rewarding companies like an Applied Materials, which right here, right now, is having its worst day since March 2020 and eroded all of its gains for the year, Marta? How do you decide who are the winners longer term in this environment?
I think the winners is one of the bigger questions that we're looking at, especially when you start to look at it in the context of artificial intelligence. When we're taking a look at corporate earnings long term, of course, we're concerned about the effect that deglobalization will have on those corporate earnings. And yet, when we look at the estimates that artificial intelligence can add to corporate earnings and to profit margins, it more than offsets it. The question is who those winners are. And what we've seen in past periods of innovation is that the early winners are not necessarily the long-term, the enduring winners. And there's also questions as to how different industries respond. At first, folks thought, well, software is the next leg of this story, but that doesn't necessarily need to be the case. If some of these big tech companies can capture some of the developments there, it's not necessarily going to be the small cap companies that win. So when I'm looking at this and I'm thinking about how do you play this, I think it's more of a broad-based question than it is trying to find and pick those narrow winners.
So you take tech thinking to other industry groups?
That's right. Yes, absolutely. So, for example, if you're taking a look at where can you apply AI, where can you apply some of these narratives, one of the areas that we've heard talked about regularly is healthcare and applying artificial intelligence to research and development. That's a long-term play, and of course there's tons of headwinds against healthcare, pharma, and the like. And when we think about those headwinds, those are opening up pretty attractive valuations, while there's also this positive long-term narrative that's there. So I do think that we can look at some of these other areas, particularly those that are a bit cheaper. There's not many of them. There's a few, as areas of long-term beneficiaries of AI.
Marta, it's funny for me, but it's been a week where economic data has impacted technology markets, right? PPI. And I grew up in the Bloomberg school of why do we care about the Fed? Because higher rates discount the present value of future cash flows. And I just wondered if you'd react to that statement, please.
Well, listen, I mean, I do think when we think about economic data and we think about technology, there are these secular growth themes that can really push back against any headwind that economic data poses for technology. And then, of course, there are other areas of the market that are more sensitive. When I think about the economic data that we're seeing come through, all that comes out is this idea of mixed signals, and people can kind of project whatever view they want on the market and find evidence, or on the economy, and find evidence to support that view. I think at this point, what matters more are the secular themes rather than some of these economic data points that are trickling in.
Briefly, Marta, it's also been a week of record highs in crypto IPOs. How many questions do you get on that?
Well, it does come up more and more. I think one of the things that people are looking at when they see the record highs in crypto, or when they're looking at IPOs, or in fact the kind of resurgence of the meme theme, is what does this mean in terms of the speculative froth in the market? I don't think we're at all-time peaks there, but there is this measure of complacency that's been baked in, this kind of sense that nothing can go wrong, and of course that's reflected in valuations. So I do think when we're looking at those kind of signals, it's important to remember that things are a bit priced for perfection, and we could see some volatility in the near term.